What's going on, YouTube? Coffee and Crypto. We are back here with our weekly market update for you. We got some interesting insights to go over. But first, I'm Rob,
And this is Nick.
and let's get into it. We'll start off with the Bitcoin price. Right now, we are at $21,680, and we've been trading in this bear flag range for quite some time now. So, when did we get in this range, Nick? Let's go to the calendar there.
June 14th, it looks like.
That was when everything was crashing down. So we've just been basically trading sideways in this range. If you're a trader, it's actually been a pretty good time because when you're in these ranges, you're just range trading. So it's kind of been like a trader's market going sideways here. But eventually we're going to have to break up or down. And we have our predictions that we want to tell you. But first, Nick, tell me what you're seeing here, what you think about Bitcoin, the market, and what direction you think we're going to go in the short-term future.
All right. Let's take a look here at the charts. I typically don't have the 100-day moving average plotted on here, but I plotted it just to show you guys that it looks like we got rejected up here. We were kind of just creeping up in this bear flag pattern, and it looks like that daily candle on, when was that, August 15th, got rejected right at the 100-day moving average. And then we kind of waddled down here a little bit, and we had this long liquidation event that happened right here. I remember seeing, I think I woke up in the morning and I had some positions leveraged long, and I woke up with my account at zero, got liquidated. So that long liquidation took me out of a couple of my positions. Thankfully, that's one of the reasons I don't trade with my entire net worth in a trading account. You just trade with a small percentage to stay safe. But anyways, talking about the technicals, this is a bear flag formation. And typically what you'll see is the length of the bear flag will get extended lower. So what is the length of this bear? 28,000 down to 20. So you're looking, we could have a 6,000 point drop here from 22,000 down to the teens range, which I see a lot of people screaming on Twitter and YouTube that our next move is going to be down. However, I am seeing some contrarian, like some divergences in the indicators that I think the market could surprise us and we could actually break higher from here. What happened with this long liquidation? It happened so fast. It was like over the course of, I think, 1 or 2 minutes, Bitcoin dropped like $1,500. That wiped out a lot of the leverage longs in the market, including myself. So what that does is it gives the market some breathing room to go higher. I was actually surprised that we got stopped out here at this 100-day moving average, because if you look at the volume by price, once we get above that level, it's free to run. There's not a lot of volume of Bitcoin that is traded between 25,000 and say 29,000. So I do believe if we do get back up to this level and break out of 25,000, it's going to be a very quick run up to $29,000 to $30,000 in Bitcoin.
My contrarian comment to your contrarian comment is, if we're in a recession, how can a risk asset have a run up?
That is pretty easy to answer. Charts don't always go down in a straight line. Yes, the macro indicator of, yes, Fed's tightening, they're raising interest rates, and historically, typically, risk on assets fall when the Fed is tightening. They always say, don't fight the Fed. However, if you look at any historical bear market trend, they don't always just continuously go straight down in a straight line. There's always like retracements. There's something called an ABC correction, where you have the initial A move. The B wave is like a move up within the bear market trend, and then you continue your way down. I do believe we've come down so far so fast in this bear market. Yes, the macro trends are still bearish, but I do believe that we've come down so fast that a bounce is inevitable. And I just wanted to talk about a couple other things. We've looked at this Puell multiple in the past. It is a ratio of the daily coin issuance versus the yearly moving average for Bitcoin. And anytime that the Puell multiple gets down in this $1 range, it marks a bottom. I mean, you look all the way back here at 2015 when the Puell multiple was down here, that was a bottom. down here in 2019. That marked the bottom for Bitcoin. And look at where we are right now. That's one contrarian indicator that I'm seeing. Also, another contrarian indicator is the fear and greed index. We're sitting at like where are we? A 25 right now. Right before that long squeeze that we had last Friday, we were at a 41, and now all the bears are jumping on. I'm sure there's a lot of people leveraging short right now, thinking that we're going to make a move lower. I believe that those people shorting right now are going to get wiped out. So even after I got wiped out on that long squeeze, I re-upped and I'm leverage trading long at the moment. So those are two things that I see right now that are kind of divergences in what the overall trend is showing.
Those are some good points there, Nick, and that was a good answer to my comment you had there. So basically, what we're potentially considering is a bear market rally, which does happen. If you look historically at bear markets, you will see, it's not just a straight downward trend. You will see rallies where price will rip up, and it's great to trade. Like it's phenomenal to trade that breakout. And on the Pure multiple, I caught something on there. So, like, if you look at, let's see, this one here, this was what, 2018. Like, if you were to zoom in on that, it could to have seen that you would hit a bottom here on this first half, but then it came up and then it actually hit the bottom after that. So what that was, where are we here? Looks like that first bottom was around November, and then that final bottom was around, late December, early January. So who knows if that was the bottom there, and then we're just going to trend up, or if that was like the initial bottom, and then we had this little upward spike, and then we trend down again and hit like an actual true bottom. So just another way to look at it. But we do have another interesting point to go over for the upcoming month. We're closing out August and going into September, which is historically Bitcoin's worst month of performance. So let me zoom us out here, and you can see Bitcoin's basically monthly lifetime percent gain and loss. And it appears that September historically is the worst month for Bitcoin in all of its history since it began. And we're about to go into September, and there's a lot of factors that are bearish. Economy, inflation, spending, politics, uh, monkeypox, all these things. So we got a lot of factors going against us. Now, could this September play on trend and play out historically like another bad month? It could. There's a lot of factors that could make it perform poorly. If it does, then the price is going to go down. And that's, a lot of people think it's going to go down further. Now, is that a good thing or a bad thing? Well, it's a bad thing if you're holding because you have unrealized loss. But if you're looking to get in, this is actually a good thing, because if Bitcoin goes down, another 10%, 20%, 30, 40, 50, whatever it is, and you want to buy, you want to get into the market, you want a dollar cost average, maybe you're waiting for $15,000 Bitcoin to purchase, a whole Bitcoin, 25% of a Bitcoin, whatever it is, or these altcoins, this could be your chance to get in. So don't look at this as, something to be afraid of. Look at it as a opportunistic time. So something to be aware of. September's right around the corner, and we do have some factors against us. So only time will tell, and we will see. So other than that, anything else to close us out, Nick, before we
just a couple other things. We got the couple economic. I just want to talk about the economic calendar here. Today is Wednesday, August 24th. Tomorrow we've got a couple pieces of data coming out. We've got the GDP coming out tomorrow, so that could move the markets. It typically has a large impact when the GDP is released. They are anticipating, that we shrunk by 0.5% in August. Last month it was negative 0.9%. So that's actually improving on trend, which is good news. And on Friday, I'm kind of curious to see what this the price index is. I think I saw something on Twitter or maybe it was YouTube that gasoline prices have decreased every single day for the last 70 days. And I've actually noticed that at the pump. Last month or 2 months ago, gas was close to $5 a gallon here in Central Florida,
It's because
and
they empty the strategic reserves.
now what we're like down to like 320, 330 a gallon here. So it's getting better.
I don't know how long it's going to last though.
However, yeah, I just kind of wanted to show you guys the economic news that we got coming over the next couple days that are going to move the markets because we've kind of just been trending sideways, like we were showing you. It's going to be interesting the next couple weeks, see how this all plays out.
Eventually, we're going to go up or down.
Yeah, I'm predicting a move. Then I'm predicting that the next move is going to be higher. I could be wrong, but that's where I've got my bets placed right now.
I'm bearish.
And Rob is bearish. Um, but after all that, this is not financial advice. Rob and I are not financial advisors. So if you don't got anything else, we can wrap it up there.
See you in the next one.